I'm about to do something that I never thought I'd do since I started investing 15 years ago. Invest in an index fund. For many people who are just starting out in stock investing, choosing the right strategy can be a very daunting task. In our last video, we talked about how having an investment process and sticking to it is vital to your success as an investor. And we recommended index investing to those folks who want to take a more passive approach. Today we're putting index investing to the test by actually investing our own money into an index fund and sharing with you our strategy and process step by step. If you're just getting started in stock investing, interested to learn more about index ETFs, or are struggling to find your own investment approach, then stick around because this video is for you. Hi, I'm Chris.
And I'm Sam.
And thanks for tuning into our channel where we're all about achieving wealth and financial freedom through a three-part strategy. Earn more, spend less, and invest the rest.
All right, guys, let's kick things off with a little Index ETFs 101. Now, we have inserted chapters into this video, so if you already know what an Index ETF is, then you can go ahead and skip on to the next chapter.
An index ETF is a basket of securities that trades like a stock, and it closely tracks the major indices like the S&P 500.
And a lot of people choose index investing because it's a fairly passive strategy and it has a long history of having excellent investing results. So if you're thinking about buying an index ETF, there are three really important things that you should consider.
Yeah, the first is liquidity. So this is just how many people are trading this index fund ETF. The next is dividend yield. So just like a stock, an index ETF will pay you a dividend. And the last, and maybe the most important, is the expense ratio.
So think of these as being similar to the management fees that you would pay if you were investing in a mutual fund.
Yeah, but because this is a passive investment and the management of it is far less
labor intensive,
yeah, the management, these expense ratios are going to be much less than the management fee of a mutual fund. So now we're going to go through our investing process when it comes to investing in index fund ETFs, and we're going to discuss which index fund ETF we chose and why.
So just like you saw at the beginning of this video, we are putting our money where our mouths are by investing $2,500 on the first day of every month into our selected ETF. And what we're going to do is give you guys monthly updates on our channel so that you can see really how our investment is performing. And as a side note, we are also going to be doing the same process with Magic Formula investing, and we're going to be doing a comparison. So stay tuned for those future videos.
Okay, so we are putting the top 3 index fund ETFs on the screen in a table format that shows you a little bit of why we're picking the Vanguard ETF. This is an ETF that tracks the S&P 500. Currently, it has the lowest expense ratio and it has the highest dividend yield. So for us, this is the right decision.
So let's talk cost averaging. So we are investing the same amount of money on the first day of every month, and we're doing this because it helps us to reduce our emotion in the investment.
Yeah, that's right. Emotion can be a killer, and right now with so much uncertainty in the market, we want to take a more systematic approach.
Before we wrap up this video, we want to ask you a question of the day. Would you invest in an index, and why or why not? Let us know in the comments.
Our answer to the question of the day is yes. We are willing to invest in the S&P 500 index fund.
And this is because it offers diversification and low management fees.
And we believe in the long-term success of the US economy, which is what the index fund will track. Now, over the last 100 years, the S&P 500 has basically done about 10%, which means that if you invested, you will basically double your money every 7 years. And Warren Buffett, who is arguably the greatest investor of all time, says that most people should just be putting their money into the S&P 500 index fund.
On a more personal note, we have decided to start index investing now because sometimes we have a tendency to be really conservative with our investment strategy.
And don't get us wrong, being conservative is a great thing in investing, but it does keep us out of the market when there's a lot of gains to be made.
And so by taking the approach of index investing while also using cost averaging, we are able to make a systematic approach to investing our money in a way that makes us feel comfortable with all this uncertainty in the market. All right, guys, that's it from us. We hope that you found this video useful. If you did, please let us know by hitting that like button, or better yet, subscribing to our channel.
Yeah, and don't forget to connect with us on Twitter or on our Facebook group.
Stay tuned for our 1-month update of how our index investing is performing, and also check out our future video on magic formula investing. Remember, earn more, spend less, and invest the rest, and we'll see you next time.